Hi believers, this is Amit from Via Team, and I'm here to provide a weekly bite and the road ahead in the markets. The Indian stock market benchmarks, the Sensex and the Nifty, have been in negative territory for the last consecutive weeks, the longest losing streak in 5 years. Both key indices, Nifty and Bank Nifty, declined nearly 1% in the week. The broader market fared worse, with BSE Midcap Index falling 1.1% and the Small Cap Index slipping nearly 1.4%. Much of these weakness can be attributed to escalating geopolitics and the steep tariffs imposed by US President Donald Trump on Indian exports to the United States. US tariff on Indian goods now stand at 50%. India's tariff is now higher than that of its export rivals such as 20% for Bangladesh, 30% for Vietnam, 30% for China. By 27th August, the tariff will be implemented, hence we have 17 days to work out with US. Even more concerning is Trump's increasingly aggressive stance against India. However, the silver lining is this tariff is likely to be temporary, aimed more at pressurizing Russia than targeting India. Going ahead, the tariff related development would dictate the course of action. Meanwhile, foreign investors have dumped over 1 lakh crore year to date, dragging their ownership to under 16% of total listed market value. On the earnings front, 50% of the companies have declared the results so far. Median revenue growth rates for the companies have been decent, around 7 to 8%, and profit after tax growth was around 12%. Nothing extraordinary due to changing geopolitics. Capital good, transformer companies, power and distribution, hospitality related sectors continue to perform well. Technically, the lack of follow through buying resulted into another bear candle over the sixth week in the row, indicating a corrective bias. Main market indices are at their respective support and more likely to bounce at first sign of easing tensions. Many technical indicators are indicating oversold condition on daily time frames. Hence, any positive development on the tariff front would help index to resolve higher and witness technical bounce back towards 24,800 marks in the coming weeks. Meanwhile, for a meaningful bounce to materialize, index needs to form a higher high and higher low pattern and decisively close above previous day highs, which has been missing over past 12 sessions. Failure to do so would result into extended correction, wherein key supporters place around 24,000 to 23,800 level. Please also understand there is a liquidity crunch, meaning no buyer interest in the market, dropping the price of equity down aggressively when the seller tries to close the position at any cost. In technical studies, 200-day moving average has the utmost importance where long-term accumulation takes place. The index is approaching the key support zone of 24,000 level, also being 200-day moving average, indicating a possibility of consolidation and technical pullback. Hence, traders should refrain from creating aggressive short positions in the upcoming week. Instead, focus should be on accumulating quality stocks backed by strong earning in a staggered manner. Key watch in the coming weeks would be geopolitical development, particularly Trump and Putin meeting in Alaska, and progress in Russia-Ukraine peace talks. Any breakthrough could pave the way for lower tariffs in India, as the current high rates are primarily a lever to push Russia towards a peace deal. Globally, equities rose last week as investors clung to the view that US interest rate may fall further this year, with European shares posting the biggest weekly gain in 12 weeks on strength from banking stocks. Concluding, Trump's unpredictability and aggressive tone are serious concern for the Indian stock market right now. Please do understand, you may consider Trump lunatic, but currently he's the most powerful guy in the world. Some experts estimate the current tariff will shrink India's GDP growth by as much as 1%. However, hopes for negotiation are still alive, as 50% will be in effect post 27th of August, and market will pay a close attention to it. As per me, 50% tariff is like burying the export to US, hence things needs to sort out pretty soon. It is also too early to say whether the trend of FPI buying will come, as tariff uncertainty and unimpressive earnings keep the short term outlook in the market a little bit hazy. Staggered approach investing in quality companies is the way to go, as eventually market will continue upwards in months if not in weeks. On Via front, we have released a commodity product called Via MCX and is available on Play Store and App Store. It is free for now and there's no subscription attached to it, and we would recommend to use it if you engage in commodity trades. That's all for today. Wishing you a profitable trading week ahead. Thank you.